Good morning and welcome to this Monday, November 2nd, 2020. Uh, we're at Trading Places Live here at Earnings Beats. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Futures looking pretty good. I was nervous going into the weekend, thought maybe we might see some red futures, but that was not the case. Overnight in Asia, things were green. This morning in Europe, things are pretty green. The DAX was up about 2% last time I looked. And if you know about the correlation between the S&P and the German DAX, you know that correlation is pretty strong. Last week we saw the DAX really struggling at the end of the week, and the S&P followed suit. This morning we've got the DAX up a couple percent, and we've also got the U.S. indices following suit to the upside. Seems to be a little bit more strength toward the down, the S&P, than to the NASDAQ, but we'll see whether or not that changes during the trading day. But at least at the open, it looks like U.S. equities will get off to a pretty good start today. And we're going to get into what happened at the end of last week in just a minute, but I do want to first go over to Earnings Beats for those of you that are new. And just point out that you can sign up for our free Earnings Beats Digest newsletter, which is delivered Mondays, Wednesdays, and Fridays, normally before the market opens. I know this morning we had an internet stock. If you look back, some of the best earnings reports so far this quarter, I would say Snap and Pinterest, two internet stocks, probably are right up there near the top in terms of the best, not only best reports, but also the best reactions from Wall Street, especially Pinterest. Pinterest was up almost 40% intraday the day after reported earnings. So anyhow, there was one other upcoming internet stock that's going to be reporting this week, and that was included as a stock in the Earnings Beats Digest. And I'll take a look at that for you in just a couple minutes. I'll take a look at that stock. But that's the type of thing that you can get from our free newsletter. So if you'd like to subscribe, there's no credit card required. It's completely free. Just type in your name, email address, hit that subscribe. You can unsubscribe at any time. But just a way for us to help the community and provide some, what I think is pretty good education and how we look at the market. And maybe if you don't look at it that way, maybe there's some things that we do that might help you. Over here, you can see when we put our research to work, these are our portfolios and our performance. And I can tell you last week wasn't a good week, especially Friday. Friday was a really bad week, it was a really bad week. It was actually a really bad year on Friday. But the market definitely favored more value stocks. A lot of anything that's done well this year for the most part was hit on Friday. It was almost like the market was just cherry picking anything that had been up and just said, we're selling. And I don't know if that continues. That obviously will be something to watch. I don't think it will. But Friday was a rough day. But anyhow, here are the performance numbers for each of our portfolios. You can see this is performance since inception. And we have the inception dates here for each of the portfolios. And you can compare that to what the S&P 500 did since their respective inceptions. So since November 19th, 2018, for example, the S&P 500 has gained 21.5%, but our model portfolio is up over 150%. So it's a lot of outperformance there this quarter. So this would have been since August 19th. And believe it or not, now that we're into November, we're coming up on November 19th. It's almost the end of this quarter for our portfolios. But you can see our model portfolio up another 10% this quarter. The S&P 500 is down 3%. That's 13 percentage points difference in under 3 months. That's pretty strong relative performance. And even though we've given some of it back on some of our portfolios, the aggressive portfolio has been very volatile. Started off the quarter really weak. We fell 10 percentage points behind the S&P 500. Next thing, we were probably up close to 10 percentage points above the S&P 500. Now we're up a little bit more than 2 percentage points. So that portfolio has definitely had some volatile stocks in there. And we've moved quite a bit. But you can check out the numbers. I think all the numbers are pretty good. And this is, what we provide our members with. And like I said, November 19th coming up right around the corner. So if you'd like to be part of our, what I call our draft, and it really is a draft. I mean, one advantage we have to picking stocks is we can pick any stock we want. It's not like we have to take turns. We get one and somebody else picks, and we have to wait for our turn again. We can pick any 10 stocks we want for each portfolio. So that, if our method's good and our strategy's good and our research is good, we should be able to come up with some pretty good stocks. Especially that model portfolio, to me, is the flagship, because that's where, when I'm going through and I'm looking at the best of the best, they're generally going to get in the model portfolio. If I really like the stock, it's probably going to wind up in that model portfolio. Anyhow, that's enough for earnings beats at this point. Let's take a look at what happened on Friday, because Friday it wasn't bifurcated because everything was down, but it felt bifurcated to me, in the sense that there were just certain stocks that really took a hit while others seemed to be rebounding somewhat. You did have a couple of sectors that finished in positive territory: energy and financials. Energy, of course, been in this horrible downtrend, but we did see some relative strength there. Financials also been very weak, but we saw a little bit of strength there. I'd really like to see financials, the XLF, hold this 23 level. But if you look at these two groups, the accumulation distribution, also the weakest. So even though we had good days on Friday, you've got to be careful, because these are probably, well, energy is definitely the weakest group. Financials may be challenged by some of the other defensive groups, but still, I mean, this has not been very good over the past several months for financials, and you can see that AD line's been weak. But looking at the major indices, the Dow Jones finished down about 0.3%, so 0.59%. The S&P 1.21%, the NASDAQ 2.45%. So you can just see, as you go across the board, the more risk you take on, the more the losses were on Friday. Mid caps down 0.4%. The small caps down 1.36%. So we did finish down across the board. I do believe we're still in uptrends, although the Dow did take out that September low. We did rally back, came back up quite a bit on Friday, earning back a lot of the losses intraday. But there's still some work to do. Nice to see the futures up. One thing I will say is that when you get these false breakdowns, if it turns out to be a false breakdown, a lot of major lows are set just like the Dow, where you go down a little bit below that prior low to trigger more selling, and then you reverse. So that will be interesting to see whether or not we hold that low on the Dow. I suspect we will, but there's still a lot going on in the market. Volatility is still really high. Anytime we get the VIX up in the upper 30s, you've got to be very careful. What looks good in the morning can turn very sour by the afternoon. We do have the U.S. election tomorrow, so there's plenty for the market to be nervous about right now. The virus cases are exploding here in the U.S. and across Europe. London, they've announced that they're going to be locking down for 30 days. So there's plenty for the market to chew on. And, I'll be watching to see not only which way we go, but I'm continuing to watch rotation. I'm going to talk a little bit about rotation in just a couple minutes. All right, 10-year Treasury yield. This morning, there were a couple economic reports due out. I did not see, actually, I think the PMI manufacturing and the ISM manufacturing both due out, and both expected to tick a little bit higher. So the PMI manufacturing is expected to be 53.3. September was 53.1. October, ISM manufacturing expected to come in at 55.7. September was 55.4. So got both of those. And then you've got September construction spending due out at 10 a.m. this morning. And the expectation is there for it to drop a little bit from August. August was pretty hot, rise of 1.4% in construction spending. September looking for a rise of 0.9%. So a little bit of a pullback there, but still pretty strong. Looking at the 10-year Treasury yield, I just updated to give us the latest, 0.845. We saw a big rally at the end of last week that did not coincide really with much strength in equities. So see what happens if we get this breakout, 0.87, 0.88. If we break through that level, the only thing left in the near term, and when I say near term, I'm going back last 6 months or so, the only thing above us would be that 0.96% that was hit back on June the 5th, right before the market topped on June the 8th. So that right there, that move up, there was a lot of money that rotated out of the defensive bond market, but rotated into, if you recall, a lot of areas like the cruise lines and the airlines, a lot of the groups that have been hard hit, they set major tops back on June 8th. Now, the rest of the market and most of the market we've been focusing on at earnings beats has continued moving higher. But those groups that led that rally, and I'll show you the S&P 500 because it wasn't just the 10-year Treasury yield moving up. But here was the June 8th high right here. And if you look at a group like the recreational services, that was the high, June 8th. So that's kind of what I'm talking about. But then you have other areas like, say, recreational products, who on June 8th were here, but you can see continued moving higher. So when I talk about rotation, that's what I'm talking about. Wall Street, you don't want to be in the wrong groups. And I still believe those pandemic hit areas, the airlines, the cruise lines, which is part of recreational services, those types of areas, the hotels, I still think you want to stay away. When we go back, I've actually got a pandemic index, and it's still probably 12, 14% below the high that was set back in June 8th. Until that breaks out again, I'm kind of just ignoring those groups. And for me, it's 10 groups, 10 industry groups that I created this index using the user-defined index at Stock Charts to track what's going on in those areas. Because when that index breaks out, I think that could be the sign that, hey, maybe we need to be considering more of these different areas in the market. Because I think we're in a secular bull market. I know we had a rough last couple of weeks. I know since that September high on the S&P 500, you can see it was August high here on recreational products. But the last couple of months has been consolidation, but we've got to give the market a little bit of a rest and a little break. I mean, we had a run up from the lows back in March. We had huge runs. So I think the market's entitled to digest those gains as long as we don't break down. And short term, that breakdown for me on the S&P 500 is 3,200. So if I pull up the S&P 500, you can see right in here. Also, after we broke out above this high, when we went back down, I think that number was 3,204 here was the low. This low here was 3,209. The low on Friday, I think, was 3,233. So we're getting down close to that area, but as long as we hold, that's really what I want to do. I'd like to see us, I'm okay with sideways consolidation, even though I believe we're going to go higher. I'm still okay if we sideways consolidate. What I don't want to see is start breaking to lower lows and lower highs. Could we get a little bit of a false breakdown? Yes, but if we did, I'd want to see that quick recovery. I do not want to see day after day after day going lower. That would certainly call into question this daily chart, and then we'd have to move out to the weekly chart and start looking at some things. And you can see we finished last week just below the 20-week moving average, and that was the first time since back in May. So that was kind of a big deal. We want to see the market recover and move right back up above. We saw this back in May of last year, and this was back with the trade war. May was a rough month because of the trade war. But we went down below that 20-week, but you see the next week we came right back up above it. When we came back down below again in August, right back up above it. That's what you want to see. You don't want to see the S&P starting to weaken and continually moving lower and lower. All right, I'm going to move into talking technically. And what I want to do here is I want to talk a little bit about, I was mentioning the rotation. And so there are a number of industry groups. I think I've got 14 here. And this is really important for me as we're going into November 19th for the possible draft. I'm watching to see which groups are beginning to show signs of relative strength. Because if I see a company that is performing extremely well, like, let's say electronic equipment index, which is now broken out above the 20 and the 50, the 20 is trying to get above the 50. The relative PPO has gone positive. We haven't seen that very much. A couple of times, didn't really last. So this one's got a little bit of history of breaking out and failing. So I keep that in mind as well. But it is definitely starting to show improvement. That relative PPO is positive. The other thing is we did get a breakout, but it didn't last long. I would probably want to see on an absolute basis this trend line hold. Already, again, this one maybe is not going to be one of my favorites because it's had opportunities in the past and it's just failed. And it's, I don't mind giving a second chance, but I don't know about a third, fourth, and fifth chance. And that's what we've seen here on recent breakouts. Here's breakout, there's breakout, there's breakout, there's breakout, and that was all followed by weakness. So when I see this start to move up, I don't know, I get a little nervous. But there are other groups. One group here is the electrical components and equipment index. This one's been pretty steady to the downside. This is now starting to look really strong. You can see on a relative basis, the PPO has now moved up to +2. Don't normally see that too often in a weak group. If you're getting your weekly relative PPO up to over 2, that's showing strength for a sustained period of time. And you can see that here, trending above the 20, which is now above the 50. We also got a breakout. Maybe again, watch this trend line. But that was we go back last 2 or 3 years here, trying to get through 390 to 400. We went above it. Now we come back down. Watch this group. If this group turns right back up around up to the upside and takes out this recent high up around 416, I think that would be pretty bullish for the group. So this is what I do. I'm just going through now. In technology, there's already great areas. Computer hardware, which was the worst performing industry group on Friday, still looks very good. Again, Apple came out with their earnings. They were awesome, but of course, everything was already built in. Apple already had a huge run, and so it's consolidating. As a result, the group took a hit. Overall, though, when the group takes a hit, generally speaking, it's a time to buy or a time to be looking for entry. So I think computer hardware remains strong. So what I'm pointing out here are groups that are improving, not groups that have already been strong, but groups that are trying to turn things around. I mean, we're looking for new leaders. If we go down to energy and you look at the renewable energy space, I mean, you can see the downtrend and the way the PPO is negative. Look at what happened if you caught renewable energy on the way back up as it was starting to make some good moves. See where it gets to +2 and then just continues to accelerate. I mean, all of this was taking place back at the beginning of July. The index was at 125. It's at 185. 3 months later, it's up 50%. I'm not saying every group would do this, but following relative strength and watching these charts and recognizing when you go positive, I think this is a big part of seeing and visualizing what's taking place in the stock market. So I'll give you a couple more areas, and I'll just show you real quick how at earnings beats we can run a quick scan when we see something like this. Let's see, what else do we have here? A group that's starting to, that I'm really watching, I love consumer discretionary. And so if you get a group within consumer discretionary that starts to outperform, that you want to keep an eye on. And one is clothing and accessories. You can see on a relative basis, we're trying to get through this high here in June. You can see this prior low was at about this 0.0975 level. So if we break up above that, we will be moving to our post-pandemic high and also clearing a key area of relative resistance. And meanwhile, look at the relative PPO now. It's up at 1.39 and rising. And we've been in this nice uptrend. Still got some overhead resistance on an absolute basis, but this is a group that's strengthening. So this is what I want to be aware of. Let me see if I can find one more for you. One group that's showing a lot more. This is a group I think that's very, very strong right now. And that is the heavy construction group. Look at the move that this group is making. There's that relative PPO up near 2. But look at this breakout above the prior high. Look at that prior low. You could draw a line. Actually, I will draw a line just so you can kind of see what I'm talking about here. But that was that prior low. We held it. We broke down. We came up. We tested it. We failed. Well, now we've broken through it. Look at that PPO getting close to a breakout here. Maybe we have a little bit of a short-term pullback, but I would be looking for another breakout. This is a group that's looking very strong to me. So what do you do with this? Well, heavy construction, I'm going to show you what I would do with it. We've got a number of chart lists. And by the way, our chart lists are going to be updated this week. I've been working all weekend trying to get the strong earnings chart list updated. So what I'm going to show you right now is still the older one. Hopefully it'll be out later today. I've still got to annotate probably another 100 charts. But if we go into a new scan here, and all of our chart lists, every stock that's on our chart list has already been looked at in terms of volume, and they're all going to be stocks. So I don't even need any of that. But what I can do is I could take a look at, let's go down to the industrials, and what I just pulled up here, heavy construction. So I can add this, and now this becomes part of the filter that I'm going to run. Now I can run heavy construction, and I can say, give me all the stocks in our strong earnings chart list that have heavy construction. So this would be one way to run the scan. Now I have no idea how many or if there are any in there, but let me always check syntax and then run the scan. Well, we got one in there. AMRC, it's got a scooter of 94. And we pull up the chart, and I think this was earnings related when it gapped up. It's pulled back. This is a pretty nice pullback. 20%, close to 20%, getting back to the 20-day moving average. This is a stock showing tremendous strength. And if I pull this up on a relative basis, you can see, okay, here's the stock. Here's the heavy construction index going higher. Here's the stock relative to the heavy construction. So now this is what I was talking about. So now you've got heavy construction, which is becoming a leader. And this is a stock that's leading the group. Well, look what it's doing to the S&P 500. It's burying it. And that's how you beat the S&P 500, by finding companies like this. Now, I like it because it's pulled back and had a nice little move back, tested the 20-day moving average. I wouldn't be surprised to see it move higher. It also broke out from this prior high at 35, which is where the 50-day moving average is. So if you're a little bit more aggressive, I would consider taking a position at the 20-day. If you're a little bit more, nervous about the market, maybe you take a half position. If it gets back to 35, you fill out your position. At that point, you will have seen a $12.50 drop from the high down to 35, from 47.50 or nearly 47. Let's just call it 47, down to 35. That'd be $12. I mean, that's 25% of, a drop in just a couple of weeks, and you're getting into a leader in a group that's leading. I mean, you can't invest in the stock market without taking risk. I'm sure some look at it and say, well, it's gone up. What if it pulls back? Well, what if any stock pulls back? I mean, we have that risk in no matter what we do. It could be a sector ETF. It doesn't matter what you get into. You've always got that risk. I mean, if I find that trading with this kind of a system gives me confidence. And I think our portfolio numbers, which I showed you earlier, if you go back and take a look at these portfolio numbers, this is what we do. We look at stocks like AMRC. We want stocks that are showing these lines going up from left to right, because you're in the leading stock in a leading industry group. If everything's going up from left to right, and so this isn't in any of our portfolios because as of August 19th, it didn't make it. But I mean, it's even got a strong AD line just at the new high. I set a new high on the AD. So this is what you can do using our research at Earnings Beats. We provide you the chart lists. We provide you portfolios, the way we look at things. You can do with it whatever you want. If you're an annual member, you get this relative strength industry group chart list. We'll send this to you. Now this, it's 104 industry groups, and I have had a couple of you all write and tell me. I mean, I know that there are 3 industry groups that have changed its stock charts. I'm putting some feelers in the stock charts to see if anything else is changing before we start making changes onto our chart list. But there was, let me see if I can find one for you. Was tobacco one? No. Whoops. Let's edit this. We'll do the summary. I know paper was one. Where's paper? Under materials. Paper. Okay, so if you pull that one up, we have 3 on here. Paper is one. I think tires is one. And there might be one other one. I can't remember what it is right now, but there are three. If you go through our list, when you go to pull it up, it won't come up. And so, they've got a new ticker for the paper. And if you want to change your own, you could go ahead and just remove those three, and you could add three new ones, just put them in their spot. But what you could do is just go to the sector, go to the materials, look for the paper. There's the new ticker symbol. So it's no longer DJUSPP. It's now $DWCPAP. All right. So just to show you how you can do that. Actually, let's go back over here for a second. All right, DWCPAP. So what I could do here is just go into the edit. Go down to materials, and here I can just hit this little pencil, and I can just change this to DWCPAP. And save the changes. Now when I come down here, now you can see I've changed it on this list. And so when I click on this, oh, wait a minute. Oh, I know I have to go in and actually pull up I just changed the title. My bad. It's Monday. I'd actually have to replace this chart. So what is that? 011 XLB 003. Let's just get rid of this. And then we go in and we pull up, well, let me pull up one of these others, and then because I've already got the format set up here. And down here, that's all you have to do is just type in your DWCPAP up here, and then just make sure you change it also down here. I don't know if that'll change automatically or not. It might, but I went ahead and changed it. I'll update it. Now I will save this as it was 011, I think. XLB. That should at least get me in the ballpark. All right, so now let's go back to edit the list. And so now what I will do, so it's going to be 234. We'll just make it 7. No, we'll make it 3. That's where it was before. All right, so this is going to be 003. Sorry, this is probably boring everyone. Okay, now we should have it set up. All right, so now it's back in. So now I only have to make 2 other changes. But the thing is, I didn't want to change the whole thing, send it out, have everybody have to reload, and then find out that they're going to change some more. So I'm waiting to hear back to see if there are going to be any more changes to the group to these 3 groups. But anyway, so that's the relative strength, and that's how you can look at the rotation and use this chart list to be able to go through, because I can just go through each one of these one at a time and just look to see what I like and what I don't like. I want to go with relative strength. If I look at something and I don't, let's just pull up like defense stocks. Right now, look at defense stocks on a relative basis. How are you going to make money trading defense stocks? Now, one stock I think I just added, and it'll be on the new strong earnings chart list. One stock I put on there was Lockheed Martin. And Lockheed Martin, you look at it and you say, well, why would you put this? It's going down. It's not really doing anything. Well, the reason that I included it was right now defense is completely out of favor. But if you look at the relative chart, look at Lockheed Martin. It's actually one of the leaders in defense. So if defense all of a sudden sees money rotate, you're going to want to know that you've got a leader here in Lockheed Martin. But, as far as the stock doing well, it's been horrible versus the S&P 500, not because it's not strong versus its peers, because its peers have been awful, just absolutely horrific. And so the stock's, maybe a shining light in a really bad area of the market, but it's not been strong enough. But if all of a sudden money starts rotating back to defense, and who knows? I mean, I don't know what the market's saying. Maybe the market's looking at this and saying, well, we think that Biden is going to be elected, and, maybe he's not going to spend as much on defense. Maybe if Trump all of a sudden wins, maybe if there is a surprise, because I know a lot of the polls are showing Biden ahead, but maybe if Trump wins, maybe all of a sudden you get a big jump in defense stocks. You want to know that Lockheed Martin is one of the leaders in this group. All right, let's see. What else do we have? It's 9:30. I'm going to just give you, I'll tell you what, for the 3 you must see, let's use our chart lists. I don't even know which stocks. We're going to look at the worst performers so far today because the market's just open. So I'm going to give you a live view of our chart list. So let's go in, let's do the strong earnings chart list. And I'm going to do view all, summary, and we're going to look at the worst performer so far. Well, the best performer, NEO's having a big day. That's one of our portfolio stocks. Camping World, CWH, came out with earnings. So really nice pop there. And I think they may also be on our short squeeze chart list, which could really help the stock. All right, Ecom. So it's down 7.8%. Let's just pull it up. I have no idea what's going on. All right, well, on here, we annotate. I like to annotate what I think are some pretty key support levels. Now, if I did this after the earnings here. So probably what I was looking at here was I probably annotated after it had already come down and set this low after this earnings gap. So I put the support level in here and then another one in here. But the good news is after moving up, pulling back, and then setting a new high, when it did come down, it did not hit that level. So what I would probably do now if I was annotating this chart today is, I'm not sure that level matters. I would still let the gap support area. And then this was that prior low. So I would be using that now as a key support area. So if Ecom, even though it's down, I mean, you could look at it, it had a recent bounce off of 16, but I actually like it a little bit more as it gets down to 15. And especially, I think the best area, and this would require a drop of another $3.50, but that would be a major support level down here. And we got close about 5 or 6 weeks ago. So that's the way, I would be using these chart lists. So that's the strong earnings. Let's go back and take a look at, I'll tell you what, we'll look at the best performer on the short squeeze chart list. That'll be our second stock we'll pick. MNK, no idea. What we do on here is we provide everyone, all of our members, the short squeeze chart list that comprises every stock in the market that has at least 20% of its float short. I'll come back to this sort in just a minute, but I've got it in order. So if you click on the name, you'll see GameStop, 141%. I don't even know how that's possible, by the way. But I've seen multiple sites reporting over 100%. I don't even know how that can be done. Then you've got SpaceX, 84%. Ligand Pharmaceutical, 63%, and so forth down the line. But you can see this is a pretty heavily shorted stock, MNK, and it's up 7% today. So it's probably the close 15 cents though. So this thing is way down there. I wouldn't have any interest in it whatsoever. Let's see if there was another one that CRBP, 43%. And another one. See, when I look at these short squeeze stocks, if they're in downtrends, I don't even care. Because a lot of times these heavily shorted stocks are being shorted for a reason. Now, this was one that had done well, fell apart. This 15 area, 14, 15 looks kind of interesting. But it has broken back down below the moving averages. I really want to stick with the stocks that are doing well until they start to break down. Then I want to get out of them. So I would maybe look, tell you what, let's pull up Scooter in here. That'll give us a pretty good idea of what's working. So now I can sort it based on Scooter. So GoGo, 99.5. Well, it's starting to break down. I probably would stay away there. If I was in, I'd probably get out, at least until it can turn back up above those moving averages. Big Five. Now, this one I think still looks pretty good. That was a nice little hammer on the 50-day, still trading up above the 50. I would look for a reversal. Be a little nervous if it closed below 7. All right, last one. Let's see. I'll give you one more stock. Let's go with go with the strong AD and view all. Let's see what we got here. DSKE. So we got a nice winner here. Oh, nice breakout. So this is on our strong AD chart list. Probably was added as a result of it doing this coming up. You can see the AD has been rising today, actually, or actually not today. The AD doesn't update until the close. So this move right here would have been based on Friday's action right here. Very heavy volume, though, closed near the high of the day. That's why we got that sudden move up in the AD line. But we're getting a breakout in the stock today. And this is, let's take a look at the relative strength. It's in trucking. Not many truckers have been doing well, but this one is. Nice breakout versus the truckers, breakout versus the S&P. Truckers really have weakened, though. This, as I wrote about over the weekend, one of my more disappointing areas in the market. Had a breakout, nice relative strength, pulled back. But I will say that DSKE does look to be a leader in that area. All right, let's go ahead and wrap it up. Again, I'll be sending out some chart lists, hopefully a couple of chart lists later today, tomorrow at the latest, and make sure we get those out to you and get those links on our website so you can download those if you're a Stock Charts member as well. You need to be at least an extra or a pro member. All right, everyone have a great day. Be back tomorrow over at Stock Charts TV for the next episode recorded, but it will be the next episode of Trading Places Live. Have a great day, everybody, and happy trading.